So after having 5 waves up, let's turn this thing into a blue. See, so now we have, I mean, it doesn't matter how you do. The way I draw channels is like this. You simply, because if you notice that there's a lot of higher lows here, sorry, lower highs here. So what you do is just you take the low of this, you take this low to this like this. So you take the low of this W, and then you take the very last lower low, and then you take the top channel and connect it not to any other high, just connect to the very high like there, or to the all-time high, and just leave the channel like that. That's how you draw a channel. Okay. You take the lows here, these lower lows. Okay. That's the so this is a low, so basically when the price is coming back down, so you're making lower lows and lower highs. So that's your lower high right there. That this is your lower low because it came down. That's your lower high. That's your lower low. Now, what are you looking for? You're trying to see if you can make a higher high, right? So you you take the channel, connect these bottoms, and then you project it right from the top. Because if you're gonna move it like this, you see it's just not gonna fit. You need to connect the top right there. And then what do you need to do now? You just leave the channel alone. Do not do anything to it. Just leave the way it is. And yesterday, yesterday we saw, sorry, yesterday we saw that we 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 got the break above the channel and we closed above the channel, which is a good sign. It's a very good sign. So it doesn't mean that we cannot come back inside. So if this is all of 5 that is coming up, or we're gonna get one more push into this little small fifth wave, it's just to come and retest this 78.6. This is what we're going to watch next week. Okay. And from here, if we get any sort of a pullback from here, that we're gonna have to, then we'll know that like, okay, here comes a wave two that is going to move against these five, against these 5 waves that we're just going to complete. So from this case, the invalidation will move here to this low, around to this 5,800. So then from here, I don't know where it is. I can project the downside from here. Do we make a little bit, one more push toward is what, 25, 30 points? And then we'll look for 2 versus 1. Okay, so the 2 versus 1, we would have 23.6 and 38.2 down to 50%. So now we're going to have to see that how is this wave 2 is going to unfold here. That will become our zone. I would really, I mean, if you have a strong push to the upside, meaning that we will have little shallow retracement. I mean, it could go deep. It all depends. Nobody get to decide that. But instead of like opening up too much, I would just rather just leave it here, you know? But the 6,000 level, for an S&P is like if you notice, take this, look what happened. Let me show you this. Make a 6,000 here, makes it a little bit bigger. And if you notice that how many times that would just come in right back to the 6,000 mark. You know, here comes 6,000 here, failed, broke above, came down, retest 6,000, came down, retest 6,000, made another low. There we are. You see? I can keep coming back to this number over and over again. Since when? Since November, yeah, end of November, November 24. So from November, I mean, that's technically the end of November. So let's call it December. So since December, market is just sideways. Because if you notice, if you look at this, and if you just forget about all these labels here and just look at the price, how what the market is actually doing. This is not trend. This market is doing nothing. You see like how much price overlap you have. And you are talking pretty much from end of October. So call it like since November. Okay. Take out this low. This market just literally not doing anything. This is just some sort of a large sideways distribution phase. That was definitely looks like. This is not something like this, you see? Like all these this is what you call a trend right there. And you don't want to miss something like this. This is where you're gonna make the most money. You as a trader, you always trade in the direction of the trend. I mean, if you sit in and call in like this is the market top and this is the market top and these are all, that's just a wrong way, and it's a very very dangerous way to trade the market. If that any high gets made, this is the market top. It just doesn't work this way. I'm not saying that the market is not going to make it. The market is making these tops and is giving you these 5% to 10% declines. So, but it's this is doesn't but it doesn't mean that this is a crash. It doesn't mean that this was a crash. Only 5% and 10% dips are normal. It's a very healthy sign of a of a healthy trend. The price needs to correct some point at somewhere, right? If you think, I mean, if this 5% decline that we just had, right? Now everybody's happy that we just rallied right back up like this. Nobody even thinks about how much we suffered the last 6 weeks trading this job down. Are we gonna go down even more? No, we just ripped right back up. Then we came back down, made another new lower low. Are we just gonna accelerate to see if we can just make more room to the downside? Rips right back up. Then we're making another attempt coming back down. Are we gonna go this time? No. Now we just rip. You see, it's hard. This is very hard to trade. Man, I don't even know how I pulled 10 trades so far. But hey, you know what? It's good. I mean, I'm taking my time. I'm not rushing. I know how to read price. Elliott is not the only thing that I fully depend on, and I cannot simply I used to just fully rely on Elliott. That's when I learned back when I used to trade currencies. And And then I'm just got myself into GAN and some this and that, and it that just helps a lot. That just makes me look at the market on all different ways. You know, I'm I look at a lot of things. I don't think there's anybody who analyze the market or a price as much as I do all day, to be honest. But the point is, like, I try my best to find the best trades as possible. Has a much better that it has a high probability to playing out. But I mean, we miss some here there. That's just a part of the game. I mean, I cannot win the next 50 trades, but I am pretty confident that I will win most of them. So so the point now is like, okay, well, next week is what do we have? Just gonna look at the earnings. Okay, so we have I missed that 3M trade. I just looked at it and just posted yesterday as well. I was like, that's such a nice wedge. Um, and it just broke, it just ripped right back up. 3M had a nice push. Nothing. We got Charles Schwab. Like all the financials are pretty much done. I think that's just the rest of the Charles Schwab, Fifth Third. That's fine. There's Wintrust, mostly financials here. Capital One. Comes United, here comes Netflix. I mean, Netflix is just crazy premiums. Oh, stock is $900 stock. It's not going to be cheap. I'll see. I'll try to see if I could make something on Netflix. Just play a small lotto or something. PG Abbott Johnson Johnson, Ally, Kinder Morgan. I like this trade, and I really didn't realize that they have an earning coming up that soon. So I might have to reduce the size and just turn into a lotto play into earnings. I'm not comfortable risking full size position into an earnings. I never did and I never will. I mean, I see the stock can make a push to 130, but I would just I would definitely reduce the size and I'll find something else. But I'm not comfortable risking $2,000 or so into an earnings. Anything can happen, you know. So got Discover, nothing else here. G American, yeah. So we got two airlines are coming, United and American. Freeport, Texas, Union Pacific. That just has such a low liquidity stock. Um, Texas Instrument. There you go. That's just gonna be. So we had what? Well, the Taiwan Semiconductor reported. Texas is another one. ISRG already broke to a new all-time high. This stock is almost near 600 right now. Um, yeah, that's pretty much it. Comes American Express. Yeah, nothing too crazy. Except, I mean, we're gonna definitely gonna watch Netflix, but Netflix is just not a very high macro stock for for to shake the whole market anyways. So it doesn't have that much of a market weight compared to the other Mag 7. So few names, but uh, nothing really big. Um, but the I think a lot of people are betting on inauguration for Trump. I mean, it is totally possible we can just gap up next week. But when whatever the case is, I mean, if that's the case, if this fifth extends a little bit here, but that's okay. I mean, either way, then we're just gonna have to deal with some sort of a counter trend. I would really, if I would have to make a call, I would just see like if you can just get one more push here, and then we just get this push right down here, and then we just hold this channel that will become a support right there, and then from there the price can just make a move higher. That would be the ideal way. But we will see how it goes. So I mean, I don't update them. I don't have to do anything too much to it. I mean, this is an hourly chart. I mean, each session is 6.5 hour long. I mean, all you're looking for is six bars, pretty much per session. So for 6 bars, I don't know if there's that much you can move the wave count around. Anyway, so well, that's the S&P. I mean, all the other upsides, the projections here, they're all different projections. I'm gonna just leave the way it is up there, but those can come in will come into a play once we'll make a new, when the price will make a new higher high. So we need to break this 6100 mark first. Then we will entertain these 6137, 6191, 6223, So I got few of those fib extensions there. And so this one is, we got, so the 5 versus 1. I mean, if this 4 ended here, so 5 versus 1, because remember, wave 5 has a relationship with wave 1, right? So 5 versus 1 is a 6373. Okay, so meaning the distance traveled here in 1, it's the same exact distance traveled here in wave 5. It's called 5 versus 1. So the wave 2 has a relationship with wave 4 because these are the counter trend waves. So what was the 4 versus 2 was? 4 versus 2 was 5831. So we were right there, you see, almost to the penny. We got a huge, nice bounce from here. So meaning that the distance traveled here in 2 is the same distance traveled there in 4. That's what they call 4 versus 2. You take this one here, 4.40. Now you're going to measure from here to here, 4.3881. Almost there. Go 4 versus 2. 100% relationship of wave 4 with wave 2. 5 versus 1, 100% relationship of wave 1. That's how you look for projections to the upside. It doesn't mean the market it has to or must go there, but those are the upside projections. Price can just come here and fails here and then can just, make a move lower. But sometime, I mean, this is a probability game, right? So if the wave 4 is almost there to the penny and you can see the bounce from here, 3.72%. I mean, yeah, these are your entries. That's what we look for. Yellow zones, where we're going to buy. And what do? We target green zones. Those are potential upside targets. So it takes time. I mean, it takes time for stock to, for price to shape up, and then we're just gonna try our best to label that thing as in the best way possible, and to make sure and just to make sure that the wave count has the right look, which is very, very important. Um, this is a little tricky, and I mean, I could live with this. Not a very huge fan. I spent a lot of kind of time looking to this because wave 3, if you take this wave 3 here, it's very kind of difficult to count 5 waves here, because it has a lot of overlap. Um, if you know if this was a you know if this was a low, it was the low here because here we made a we made a higher high, and putting one here and then two here, you cannot put three and four because now you have an overlap, right? And then you can try to put three here, and then how are you gonna make this a three-way move a three, you know? So this is good. Um, you have a diagonal. I gotta have to make it. See, I mean, because I if I shrink that chart, it's gonna look a little small. You know, I mean, if somebody wants to look it up a little bit more bigger, I can always expand the chart. So you can count this thing as a diagonal down in two. Here's your wave three. There's your wave four. And then the only thing, remember, we talked about all the time, shorter wave one in a diagonal always going to have an extended wave five. Always. Okay. So that's the only way I can say, like, you know what? I can just only make this thing as an ending diagonal within its three. I have a confirmed overlap of four with one. So that satisfies. And plus with this diagonal is perfect. Here you have a wave three, which is bigger than wave one anyways. That's what you need in a diagonal. In a leading diagonal, you want wave three to be smaller than wave one. And then your wave four with an overlap, and then you get your wave five. And there you have, so this is good. I mean, it is very common for, for wave one to be a smaller wave, or you have a fifth wave is going to be, you're going to have an extended fifth wave. So that's all done months ago. I'm focused here. What done here, it just that's all, it's all good. We did our part and we did our job. I mean, we need to find out and see what do we make um from here moving forward. So that's the plan for the S&P. There's few things that I'm gonna show you that I mean, I'm trying to stay I mean, I am bullish, as many of you guys all know, and I'm not gonna entertain this or mix any kind of like we're just it's just there's no signs for it. I mean, I need, if the GAN is gonna give me the confirmation, yes, I will change wave count, but I just don't have that yet. Because you have to look at this, that the market breadth, which is so bad, which was so bad, now is getting better. It was so bad before Christmas, right? It was technically like we've been hearing by market breadth. So, and it is. I mean, I've been looking at, like, because it has the advance and it has the decliners. It has a lot more decliners than advance. And every day you see stocks that are making lower lows. There's not many stocks that are making highs, right? And I was like, okay, a week went by, 2 weeks went by, 3 weeks went by. So if you just like consider that, and if you notice that a market breadth which is horrible from the last 3 weeks going into a 4 weeks, you call this almost a 1 month. So what in the world that you would possibly think, like, what, it's just gonna get worse and worse day by day, week by week? It's gonna get better, right? If you just put all these technicals on one side and just like think that way, that you have an S&P 500 stocks, and you have more decliners than the advanced for a month now. What do you think is gonna go down for another month? And at the same time as you see those, if the market breadth is so bad for almost a month now, what do you think is not going to improve? Of course it will improve. So why would you even, like, why would a person would even bet to the downside? If things get so worst, they don't just get worse and worse and worse, right? They're gonna improve. But the fear on the market is that the rates are just going ripping. The 10-year yields are going up and up. If 10 years is so correlated with the market wouldn't be doing this in the last 2 months. And how many highs the 10-year yields has made? And look what market did. Market doesn't care about these fake rates. The only side that 10-year yields put pressure on is on a small cap. Small caps are the company because a lot of regional banks in there. They're just buying bonds on the security deposit from people. They're putting their money into it. Then the security bonds they're buying, they're borrowing money on a that they're getting a much higher interest rate. The higher interest rate doesn't help their balance sheet because it's going to shrink their profit margin. You're borrowing money at the higher cost. How are you going to offset the difference now? So your cost of business is going up. You want to borrow as low as possible, and then you try to see if you can make up, you know, trying to collect more. So that's why the Russell 2000 is the ones that gets hit hard as soon as the yields goes up. But at the same time, when you look at it, the Russell 2000, there's not that many big names in there anymore. They pulled them out. The top, the stock of Russell was SMCI for years. For a couple of years, then it gained a lot of market cap. So it stayed in small cap for the long time, and then when it gains excess, X amount of market cap, then they pull them out. Then this is like, okay, well now we're gonna fit into a Nasdaq or something, make them a Nasdaq stock. And then the accounting issue came in, and then they're trying to threaten them. It's like, okay, we're gonna delist you with this and that. So that stock gets out. MSTR was in there in the Russell 2000, one of their top stocks. They pulled them out, make them a Nasdaq. You see, what this market, when they're trying to do this rebalancing, that any good stock that is starting to gain much bigger market cap, they just pulls them into a Nasdaq, and they just leave literally all the garbage, okay, in the small cap. And that has such a strong correlation, as we all know, that as soon as the 10 years are going up, IWM is under pressure right away. All the bigger now this is what it is. If you I can show you, and 75-80% of these companies and small cap doesn't even make any money. Look at their earnings. They have negative EPS. Negative. Think about it for a second. You Google it. There. Can do the mark. Here. These are that's the bad and not on your top performers. Top 10 Russell 2000 market cap. I think Yahoo has it. God. The only sect stock they have, hang on. They have um kind of forgot what's the name of that. Um ETF of Russell, the cash cow. Cash cow Russell 2000. There you go. The Pacer Cash Cow ETF. This is the only all this is the these are the only companies, okay, in the Russell 2000 that makes money. Okay. It's called Cash Cow ETF. Rest is just a pure garbage. Um, so these are all the ETFs. So what is the ticker for that kind of? This is the website. I spent um some time on it last year, just looking at when these rates were just start going up and stuff, and I was just like, let me just start looking into these companies, like why they go so much under pressure as soon as the rate goes up. And then I started to realize, like, you know what, they just had this thing divided into so many different ways. They have them with the market cap, and they just had them with the ones that just like actual making money. They have a positive cash flow. And then I'm just started looking. I was like, there's like almost like 75% of these companies don't even make any money. And just like one by one, I'm just trying to look at their EPS. They all have negative EPS. I was like, there you go. That's your answer right there. You have a net, you these companies are not even making any money. I mean, how could you? It's how difficult. So you trying to buy that company who has a negative EPS, that you think that that company has a future, it has a potential that they would what turn their negative balance sheet to a positive? Or would you rather buy a company who has a positive cash flow and that they would make money? Where would you bet? you know, because you trying to buy a company, you think the business is good, that I want to buy somebody's negative cash flow, and I'm gonna bet on him, that thinking that it's gonna become positive one day. You have to just think of that way, right? I would never do that, but it's just what it is. Um, what is the ticker for this? Cash. Yeah, it tracks 100 companies. I know. Cash cow. Go cash. Look at that. Let's see. Pacer US Cash Cow 100 index. So 100 companies here in this ETF alone. Look at the rest of them. You see the difference? 7.78 compared to 3.17. It's very difficult to be invested in small caps, but it's good to have small caps. And this is I much rather just own IWM, just own all the 2,000 companies, which I have since last year anyways, and just just leave the way it is, and you have a skin in the game, and you have IWM, and you just keep doing what you're doing with your trading and the rest of the stocks. It's good to own IWM. There's not, I mean, you can still get um, a 10% return. So if if Russell, if the IWM is down 10% from the highs, I mean, so if you buy a 10% decline, and if you just go right back to the flat line, that's 10% gain for you. So if IWM will at least make something for the year to close out the year by December. So if IWM managed to rally another 5%, that's a 15% return for you. But for the index, for the ETF, is only a 5% gain. Five, so the position that I have since last year is almost 25%, because it was down, and then IWM made its way up and closed the year, I believe, like 10% or so. So yeah, 10%, like it's down like 12.17 from the highs. So here's the interesting thing right there. I want to show you this. We've been spend some time looking at the wave count, this and that. These are the weekly bars. Okay. And it was a pretty strong close for the week. Now, if you notice one thing here is I understand that all swings are down because all these tiles right there, they're all false. So we need three higher highs, three green bars for the swing to turn back up. So now if you pay attention here, what do you see? One, two, three, four, five, six. 6 weeks from 609 all-time high of a SPY all the way down here to we haven't made a single higher high yet. That's one thing. Look right there. One, two, three, four, five. Don't have a higher high either. Look at this one. One, two, three, four, five, six, seven. Gone to seven. Still don't even have a higher high yet. One, two, three, six, 6 weeks here. So you're talking a month and a half. A month and a half. None of these ETFs has made a higher high. And how often does that happens? Not as not very often. I can tell you that. I mean, if the market can overall market can drop 3 weeks, mm, 4 weeks makes 1 month. We all know that, right? It's a 1 month of four weekly bars. So 1 month is gone. So we're talking month and a half. This is one month and 3 weeks. It went to seven. And we haven't made a single higher high yet. So when are we gonna make that? Okay, so next week we wait. What do we do now? Reverse the whole thing back down. Make another lower low. So that will go down to what, seven? This one goes back to seven, and this one goes back to five. I mean, you see the signs like, okay, yeah, market is about to rip. I mean, if you were to buy, I mean, this is why I'm looking at all these things. I was like, I'm looking at a VIX. I mean, yeah, the market just took a correction down here. It's like 8, 17, 18. That's it. I mean, we don't see VIX is 30 or 35. I mean, we're just starting off a new year. The only thing that most people right now cannot understand or willing to accept this, that the market has been up for 2 years in a row. Well, the market is up for 2 years in a row, but it had 5 to 10% dips as well, which you don't see that. It's not just like it just went up 22% from the last 2 years. It had 5 to 10% drops to get to all, um, reach to the all-time highs, like, as many as we made over the years. It's just not a straight line. But the gains are just like, oh, market is paying 22%. The S&P is up 22% from the last 2 years. Okay. We could just look at the bigger time frame. I mean, it's just so the point here is like, as you can see that we haven't made a single higher high yet. So then I came across, start digging, and I went through and I come across this. So I started looking. I was like, first of all, four is pretty rare. Five is after that. Six is just it's that's a lot. I mean, going back and looking at all of these um, um, weekly bars. This is the weekly chart. And I did the same thing here. So here we have six weekly lower bars. Here we had four. Here we had four. Oh, looks three here. No, four, because this is the inside bar. That's the higher bar. It's four here, five here, four here again, and then we have six here. So what happens here? So we got eight. So we got 8.80% decline for the 6 weeks. Here's your 5 period RSI. Got 5.663 here, six and a half here. Then we got 4 weeks down here. Then we got another four down here. And here we got another six down here. And look how it turns. Turn around this week. And look where we close. So now, in order to make a higher weekly bar, we need to break this high, 6,014. That was the price. That was the high yesterday that we made. So where would you bet? We had the most horrible market breath ever, and market is S&P hasn't made a single higher high for a week, over a week. I'm sorry, over a month, not a week, over a month, because we're into a 6 weeks now. I mean, I would bet the upside all day. So I don't know. I mean, tomorrow, I mean, Monday we're closed. Tuesday we can poke another 10, 15 points above 6,014 to see if we can make at least a one weekly higher bar. So it's just very rare. So if we take this, last time the market was down six weekly, had six weekly lower lows. Look how much it ripped to the upside. So, I mean, again, market is fractal. Um, um, I mean, Trump is coming, and I don't know what happened last night with some of those meme coins or whatever. Trump meme coin just has like over a 10 billion market cap right now. It's crazy how things. So like people are kind of like blaming his son that he took his phone or something that he did this, you know? And then, but at the same time, that's crazy how things can, people can overnight can make millions and millions of dollars. Some of those guys, I don't know how real or how, somebody turned like a million into a 30 million just on that. Like, how do you all know all this? Like, you put the money in and then you reach out to say like, hey, pump this thing, and who knows what kind of a Trump meme coins. I mean, okay, well, if that's gonna be a new things now, I guess. I mean, if it has gained 10 billion market cap, I mean, that's not a joke. Somebody trying to make a joke or something, but so I think I posted this thing on a Twitter as well, I believe. But this is again, it's just you don't see this as often. A large cap can be down for 6 straight or 7 straight weeks. You need I mean, we tried here, that was the outside bar. They call the outside reversal bar. Um, the that makes a new high and a new low compared to the previous bar. But then we end up making another lower low, and then we just sort of reverse right back up. So, I mean, the probability what I see is, I mean, I is to we're so close sitting here. It's just a matter of like, if we spend this much time down for over a month, so are we, if we're gonna break this high right there, which is the all-time high, it doesn't mean we just poke 1, 2, 3 points and just come right back down. Because if you notice here, what has happened? So that's, see how close we got. They got a big rejection from here. And then after 2 weeks, we made a attempt, made a move back up. So you can definitely expect a shakeout. It's just to, you see, same thing here. We're just kind of like, this week we went up. This one we just completely more like a doji candle that you can call it. There's no body right there. And there we go. So, and then we finally made his way up. You see, they're like, you always have to pay attention to when the price makes that many lower lows for so many weeks. So the next, you know, when price will recover. See, like this is a clean breakout, you know, from this. I mean, technically, this declines is bigger. It actually goes all the way to 9, because I only left them here is because these are all 5 lower weekly bars. And this bar right there, as you can see, is a higher bar because it broke above the high of this of the previous week. So that doesn't count. So I would just only focus on if how many times that S&P was down for how many weeks. So this was the higher bar, and then we made for 2 more weeks. That's when the RSI went completely over, way oversold, and then from there we just recovered right back up. I mean, I don't. I understand that there are that that at some point, like, we have to correct this and that. I mean, what do you call this? I mean, they're all the same. 5 here, 9 here, 5 here, 6.5 here, 5 here. This is actually 9 here as well. I mean, so people who are talking about as your 2025, which is starting right there, that's your 2024 starts from here. Okay. This is your 2023 going all the way back here, which is not going in a straight line. I mean, it's all here for you to see. If we rally 22% from here, from January of 2024, but we have these dips. That's normal. That just normal. So if it just I don't know. I mean, I don't know. I have a probably have a little different way of looking at price, I guess, compared to what I don't know. I mean, I don't compare either, and I will I will just show you what I know and how I see things and what I think would be the next call that you could make that has that it just I'm looking for those some multiple odds. Okay. What I mean by that is more and more odds that you find in your that you see that it has is gonna, how do I put this thing? You look for a better, if you have a better odds of seeing, like, if you put multiple things together, and if you're thinking like, okay, you know what, it has a much many odds that I would be willing to make a bet to the upside. How I look at this, there's 6 weeks of decline. Market breadth was horrible, right? So I would bet to the upside after 4 weeks, anyways, because it doesn't happen that often. It's very rare. This exact screen that we just went through before, this is not common. I was really hoping a week, last week, that the low is in. Why I said that? Because of this outside reversal bar. This one here, this one here, and this one here. I thought like this is most of, if you see an outside reversal bar at the bottom, is a there is a very high probability that the bottom, just this is the bottom. But sometimes it's not. But look what happened the next week, made another low. But then look at the reversal. It's just because now it's just market is trying to see if it's gonna make a one green bar. You need one of these. You need to break one of these highs to make a higher high. All we're doing is just 602, 580, 580, and that's the inside week. 580, 578, 575. So we're just making lower lows. So look how ATR jumped from 15.96. You see all these ATR now? See like how it was, that's what happens. You see how ATR was dropping? How's it going up? Now it's starting to move up. That's what you call, I mean, yeah, I mean, it's because if we go back here, what are we doing here? It's the game of patience. That's all it is. But I'm pretty sure there's people just took some serious hits because they're just forcing this job, betting big. I mean, for only 2 weeks, not even full 2 weeks, because I have so many days off in the middle of the week. We only had one full week of trading from the last, what, 3 weeks. And now we're going into another, next week is another short week of trading. So, I mean, this trading hasn't really fully resumed yet on a weekly basis, how it normally is, 5 full days. So these premiums, like, they're gonna burn really fast next week as well. So, I hear you starting off a new year, you're willing to bet big, and then you get yourself caught in this kind of a nasty chop, and you just, I'm just putting yourself into some losses, and then you're gonna sit and say like, well, now I gotta chase losses the rest of my year to break even. That's not how you do or trade. I have to look at the overall market. I mean, there are times in the market that you have to take less positions. There are some times in the market that you have to reduce the size in your position. It's not every position has to be, it's just to, whatever the risk that you're going to put into a trade. You have to, somewhere you just have to be go bit, more neutral as well. Like the way I do is like I try to start off my month, and then if I will see like if I would have a decent month going by 3 weeks, I will the last week of the month I will try to size down a little bit because I want to hold on to my gains as much as possible to stay positive. All it takes like three bad trades, they're just gonna wipe off quite a bit of, you know, to just give a chunk, chunk back. And we don't want to, you gotta play around a little bit. You don't want to just. Um, I normally like, well, I have $100,000 account that I run with you guys, but those are 1,500, $2,000 trades that I take. My main focus always is on just to see I could adjust a trade with the 50 deltas on a spread. Either I do 75 or go to 100. I try to, that would be like the max, get to close to 100. Yeah, I don't want to go way above 100 deltas. One point move on a spread, it's $100. I can catch a 5 points move on a spread on 100 is $500. And I'm fine, and a lot less stress. I don't have to risk too heavy. Comfortable way to trade. I mean, if your mindset is all about those big numbers, but then you have to risk big. You have to carry like 200-300 deltas on a trade to catch a 5 points on a 200 delta is at $1,000, right? So that's just it all depends on your risk tolerance. But I trade comfortably. I mean, if I'm I'm super happy taking 500-600 bucks, I mean, on a trade, and that all adds up pretty quick in the end, anyways. So, I mean, you can end the month with four, five, $6,000 just by taking 500-600 bucks here or there, and if your trade goes in your way. It's just comfortable way of I really don't want to put myself into any kind of a pressure and say like, oh, I'm just super desperate to make money on a stock market. Like this is the trade. I have such a high conviction on this trade setup that it is going to play out in my favor. I'm going to go heavy and this and that. No, it just that doesn't. A lot of planning sometimes end up and cost you in the end. Um, what was the other thing I was going to show you? This is a 3 bar swing. Um, so the swing is up, right? It's just I do this and I chose and I prefer to do this over a wave count, to be honest. It cuts all the noise, okay? And the best part about the swing trading is that it just is super clean. It saves a lot of my time, and it really doesn't matter if there is a price on a fib or there is a price here that what we are looking to the upside. It really doesn't make a difference, right? What difference does it make? It's the same price. You just laying it out there on a two different format. So this 3 bar swing on GAN, that's the high right there, as we all know, 6,100. The first dip was 4.4. Here we got this rally back up, down in 3.6, up 3.3, down another 4.1. And now, if you notice, this is what I've been looking every single day. I was like, we started out with 4.4, 3.7, 3.6. Now you take 4.4 to 4.1. Then you take this 3.3. They're all similar. There's no such trend that moves like this. These are just like a measured moves, back and forth, back and forth, back and forth. Here goes your sell off, rips down, up, down. It's like a roller coaster. So what I was like, okay, so we took this decline of 4.4% to this low, it took 10 days. And I don't had anything on that time. I was like, okay, we got the bounce right there that lasted 4 days. Then we came back down, made another lower low, right? Then we bounced another, rallied back up. So what I did was like, okay, here's your 10 days, and here's your 10 days from here to here. That's what they call bar to bar relationship. It's such an easy bet to make, to be honest. I was like, I'm staying bullish. It's gonna rip. And then on top of it, when we completed this 10 days, I'm looking at here like, wait a second. S&P is down 4 days in a row. 4 days in a row. Okay. We were down here three, made an outside reversal bar, and made a full reversal back up. You have to pay attention when S&P is down for 4 days. Just keep paying attention to it. Four is extreme. The five is gonna be a gift. By the fifth day, dip for sure. No, it's just this is very, very rare. It doesn't happen that often. So if we just same channel we just talked about here on the wave count, here's your 60/30. I mean, we closed above here. I don't know if it's a fake out or whatever, but who knows? But the bar to bar relationship is working really good. I really like this. So swing is just the only reason that I am bullish, and you can say I'm more optimistic, is because of this signal. I'm just I don't ignore them when I see them. When I just because I know that it doesn't appear that often. When it does, I act. I'm just gonna tell you this. So what it is, how often does it appears? I mean, yes, this is the months and months of work that I put into this to build this. And I back tested it to see if it actually works. There's no such thing guarantees, right? But at least if I could see a much better outcome or results from this, I just I stick to it. I mean, I have a few others, but this one has a much better probability for me to stay in a trade and possibly look for a trade to be in. It's just called it's a mean reversion signal. I'm not gonna get into this. There's a lot of scripting and everything involved in it, but it has to meet several conditions based on the number of bars, based on the outside bars and the ATR and swings and things and this and that. So I mean, I like when this triggered at this bar right there, I was like, okay, I think we're just done with this and we're just gonna and we had a pretty nice bounce, as we can see, right from this bar. We haven't made a new low. And we end up do kind of like making, you know, bit of a whipsaw here, but we're still trying to make a way back up. So I'm just that's what is keeping me a bullish. And I was like, okay, let's give some time. And I'm just like looking at some of these relationships, but based on times, I was like, okay, I mean, this is good. I mean, 10 to 10, bar to bar relationship, So I was trying to just put few things together to see if it actually goes that way. You don't you don't get them that often. What I mean by that is these are only these are the three that I got last year. This is um, January of 2024, 2024 low. Uh, that's where we start the year. Um, we got here on this bar. This is the daily bar. So on this bar right there, see from here, we did not make a new low. Had a pretty nice bounce, came back down, but we held this bar. That bar just has to hold this low when this triggers. That's all. Sometimes it can, after 2 days, after two daily higher bars, it could come back down and try to make another low. But I always watch and see if low is broken, is it gonna is it really gonna extend down? It usually does not. It usually doesn't. It just the price will find its way up from here. The same thing it triggered here on this bar. You see the next bar came down, but it really didn't break this low of this one. See that is held and it doesn't appear that often. The reason why it doesn't triggers here and this low and this low and this low, it just has to meet a lot of conditions. So based the time horizon, the time frame on this is very big. The because I scripted that way. And it pays really good returns, but it works very well on ETFs and on indexes like S&P, NASDAQ. So as you can see it here, but the if you would just go to a random buy sell on trading view or whatever you want to look, sell here, buy here, sell here, like those are different. This is these are mean reversion signals. They're very this is very strong. We just took um this week Amgen trade based off. I took it from here. We played AMT that paid as well. So I take trades. When I see it, I act. I was like, that's it. I'm gonna go because I know over the years how many trades that I pulled off from this blue arrow. So I just keep taking my chances and just like, okay, let's see if we could hold the low and see if we can look for another two higher highs or something. Be even buying something long term as well. Is can can definitely um you can make really good money, really, really good money. So what was that? I don't know. Scott was asking me, so you're gonna sell it? I was like, I don't know. I never thought about it. Um, but I have some powerful tools in my arsenal, and we're gonna use them, and we're gonna try to make as much money as possible this year. So, but having a signal like something like this is okay, but I still have to look at few other things. I mean, RRG is another thing. So that's just the momentum does help a lot. And yeah, there's just I just and some guy was asking me something about yesterday. I told him I just cannot rely on a one single wave count. It's just not the way I could like I know that this wave count is valid, and I just cannot rely on a one single wave count. Because I screw up here, it's gonna cost every single one of us money, right? I like to keep few other probabilities in my favor in order to take a shot. I can't just buy here and boom, that's it. This is my wave count is gonna go my way. No, this can change, and I fully understand that Elliott works is really good, but it gets very subjective when it goes into a correction territory. But everybody likes to do ride this kind of a move, just one, two, and get an smaller ABC down, down to your two verses. Well, look at that, almost to the penny. Five, this is where you can just look to buy something here, and then you see you can just make a move back up. Everybody's looking for this, and so am I. Okay, my focus always is on five waves up, three down. That's the eight swings, and then try to see if we can cash this third wave. This is where you're gonna make the most money. This is the money wave. That's what I call it. Third wave. Because this thing can extend. Went to all the way to 200. The typical 3.1 relationship of three versus one, which is the golden ratio of an Elliott wave, is 161.8. So here's your wave one down into 55.47. I mean, it could end 100, but nobody knows that because how much. There you got the second gap here, just rip right back to 161.8. Even broke this one, went all the way to 200. Yeah, this is what we want. That's where you make your most amount of money to catch the third wave. That will have these acceleration gaps. Same thing down here. This is the actually see sharp decline to the downside. Gap here, gap here. It just C wave. It's always going to be the actionary wave. It cannot be a three wave. It moves. Third wave is the same thing. Actionary wave. It travels. It's gonna go fast. Same you see, they got no dips. Just a little bit of a boom, boom, sold off again the next day. Huge gap. Pushed all the way down here. This kind of a pressure, selling pressure, just not gonna give you any chance to get in the market, even short the market. It's the same thing here going up. It doesn't give you any chance to even enter the market now. Because the price is so strong as you can, there's no pullback. What do you call this a pullback? On a 1 hour chart? What, this is pullback? It just, you just rip right back to the, this is the point is, this is what you call a trend. It's more directional. It's going to have a much narrow channel because it's the way the price travels at a much faster pace. You call this a trend? When you have a measured moves up and down, up and down, up and down like a roller coaster, just you gotta have to just kind of like pay attention to look at price a little different ways. So, um, it's gonna show SMH's side. Here's the yearly bars, okay, for the year. Well, I took that thing off. Just, I mean, I know we were starting off a new year, and we got a long, long way to go. With the Trump policies and what he's gonna do, we're gonna find out all. Okay, but he's not going anywhere for the next 4 years for sure. Okay, how great and beautiful America he's gonna make, we all gonna find out. Okay, so this is his second shot. Okay, we went with him before, and market crashed while he was the president, right? COVID happened, and We'll see what happens. But if you look at a bigger picture, okay, and what the market has been doing, I had that accumulation distribution here. I think it went off. Anyway, it doesn't matter. Um, if you look here, this is the dot com low right there, right? And no, it's not a dot. The credit crisis low. The the Lehman Brother collapse. So we had this move up here, right? And these two bars, I had that thing. I think I posted on Twitter as well. These ones has this distribution phase for 2 years. So this you see, like we made a pretty high, we give a lot of chunk back. So from here, then we made a new high. This one made a new high, whatever you call this, a spinning top. Yeah, if it works. Then we rip right back up. And here's a COVID happened. So that's the COVID low right there, 34.91.58. So if you notice what the market was doing, and I have these yearly bars for a long time. Look at the highs here, 48, 48.18, 47.93. And and I'm just like looking at this, and then when we end, and this is where is it? Okay, so this is a 2023. You have a triple top. When did the market has ever topped at triple top? It's gonna get taken out because this is where the last year. This is 2024. I was so damn bullish on a market, okay? And many of you, as you know, that we did really good. Even the fact that we had 5 and 10% dips that we just looked at them before, but we're breaking out a triple top. So here's my question. My question is that you stay in a distribution phase for 3 years with a triple top. And you're gonna tell me that we just rally 1 year, but being sideways for 3 years, including the COVID crash? How does that happen? How does it even work? If this if the last distribution was 2 years, the market was up 2 years. The market was in a distribution phase, including the COVID low, COVID crash for 3 years with the triple top. And you're telling me now the market is going to stay up in the accumulation for one single year after being sideways for 3 years? You don't see a distribution here. This is a crash. Look at the size of this from 1471 high down to 741. You're looking at 49.52% decline right there on a one single year. We closed them at 38.46. Look at the range. The point is like you break in a triple top, and we closed out this year, last year. I'm sorry, a year before. I'm just so kind of because I know it just started at 2025. We always talk about last year. We're actually talking about 2023. We closed the 2023 with an inside bar. You see the high right there, 47.93. Look at the high of 2022, 48.18. We didn't make a new high last year. I'm sorry, 2023. Jeez. And then this is a COVID low, and this is the low. This was the inside year, but we closed very strong all the way up to the top. We haven't given anything to the downside in 2023. We shouldn't be. That's why the market didn't really dip at all. Because here's 47.66 right there. Because you're trying to break this triple top now. When you break this triple top, you're gonna accelerate hard to the upside. That's how those tops breaks, double and triple tops on a bigger, higher time frames. You have to look at a bigger picture to paint a smaller picture. You can't fight your life over a 1 hour wave count at a price action, but if you don't look at a bigger picture, you invest based on this kind of a time frame to see like what I am looking at something long term for the next several years. You try to build something long and you counter trend those moves with the option side. That's how you hedge. But you stay long the market because option has the ability that you can short the market, right? But the long is gonna pay you a lot more over the years as long as you're going to be trading and you're going to be investing. You stay invested. That's what the key is. But you stay invested based on a bigger time frame. But if you panicking over a 3 or 4% dip, I don't know what to tell you. You're just a fool. Stop looking at that way. Some positions takes time to build up, but as long as the the chart looks good, and if the company fundamentals are looks okay to you, it could get improved. You just have to watch their earnings. Yeah, I mean, business is gonna grow. Every business is looking to grow. Name me one business out there in the world who's looking to like, yeah, I'm expecting a 50% decline next year. Who says things like this? You as a business, as a trader who's trying to do what your potential is to grow. It's the same concept for the market. For all these big companies, is their potential is to grow as well. It's a normal way of looking at things of any healthy business. Either you start today or you start tomorrow. You want to grow. So here we are now in a 2025. We haven't made a new high yet. If we do, I mean, those are the upside projections that I have. 65, 7 to 7,500 for now. So, I mean, this is a 15-year high top. You just okay. I mean, that is completely relevant. But the point is, we're sideways for 3 damn years. A distribution phase. This is the accumulation right there. You don't go sideways and just go up 1 year. So again, I mean, any dip, I mean, we just had five. I mean, we might get 10 in a couple months, whatever. I'm a buyer for sure. 100% I'm a buyer. I mean, we just had 10 and we're almost washed out. Going almost close to the highs. But mean, we squeezed a few trades. I mean, glad it worked out. But if there is any further weakness and we're just gonna come back and retest that 57.73 low again, might go to 5,500, whatever the downside retracement, I can look it up. Um, but I'm not gonna run any downside retracement unless we break we take out the 57.73 low first. There's no point to have such a high expectations because if the screen is not telling you, if the screen is telling you to that things are bad for 6 weeks, that has a much higher probability that it will improve. So I would bet to the upside versus the downside that um, that was down for like over a month and a half now. So I was just, I mean, if you start looking at a yearly bars and with high and lows, and you could really make a case of um, something that you could see like how you're going to play out the next year. But I am, I just cannot see this is all after this. There is no accumulation last one bar when you had three in a row. The equal time is minimum three or a four before either it makes a distribution, makes another phase here. So basically what, the actual way how market works is the accumulation here, distribution here. Here's your accumulation, here's your distribution, and here's your accumulate. That's how it is. I mean, you're looking at some heavy retracements here. I mean, look at the the range here on this, 41% back in 2020. That's huge. But we'll end up closing the year with 13. We're down 41.64, but we closed the year with 13. So, I mean, but I just wanted to, I know we're just starting off a new year, and I did post this thing on a Twitter as well for some people to kind of wake up and kind of pay more attention what they actually you're looking at, to what to expect for from a new year. But this is I had a monster year last year. I'm not gonna. I mean, some people can cuss Biden and whatever, but I think he did a hell of a job, especially the stock market is did really well with his under his presidency. Fake job reports or CPI, this and that, it's gonna be the same. It's not gonna get changed. We all know that. Um, but looking at took advantage of the upside because I was so focused on this, when we started off the new year and last year, and I was like, there goes a triple top. Boom, we're ready to go, and so it's just market just breaking out. It's not going, it's not gonna stop anytime soon here. It's gonna rip hard. Plus, we closed the year with an inside bar, so we're always looking for so you can always expect a new higher bar. Once you have a higher bar, it's gonna accelerate. So something to to keep in mind. Bitcoin. I actually put all these three here on one screen, as you all can see. It's easier to kind of track this way, versus going by one. So rotation looks pretty solid, as you can see right there. Looks pretty good. Here's your coin. Here's your northeast direction heading, Here's your north, here's your east. Just beautiful. momentum with angle. Um, so perfect momentum right there. 105, 351. Auto C25, distance 6.4. Yeah, so it's pretty far away from the benchmark as well. This is a 6 decile. Um, yeah, I try to look for like 7, 8, 9. Those are the ones that have more alpha, well, because they make a bigger wide rotation. So 6 is good. 6 is very good. Like kind of like falls in the middle. 10th is the most, like that's like the extreme one. That's just the ones that are further away from the benchmark, and those are the ones that are going to make a much wider rotation. Those are the ones that are just going to give you the most alpha on a trade. So I'll show you a few of those now stocks you can start watching. This is all good. It's all 1-2 swings. I mean, veg kind of like, here's your second wave and trying to see if you can make a move. I'm going to see these lines here. And here's your retracements. This one here. We're not right there to this 400 mark now. So I don't know. I mean, we just need to extend from here. So looks good. It looks good. I was gonna show you I mean, we just started off the data. I mean, looks good. Um, um, Seasonality, bar is up higher. I mean, many of, I know we still got what, another half week, next week, another week to go with us all going to be next week earnings, as we know, we just not that much, nothing heavy. The the last week is where we're going to have some big names on the earning list. But looking at this, Tesla is the one is leading now, 5.61, Meta 4, Google 3.5, Amazon 3, Nvidia 2.5, S&P 1.96, close to 2, Microsoft 1.79. Kind of still so damn choppy. This Microsoft this last year. It's a very underperformer. Netflix 3.73, and now this is the one that have their earnings coming up. Remember, and then Apple is the one who's taking the most hit rate now. So Apple was the same way last year as well. It started off pretty rough, and it has stayed down for the first quarter, while the rest of the stocks were up. And then Apple from March rallied all the way back up to the end of the year. It just this stock is very different. You have to work to find the personality of that stock. Okay. Apple dipped that much, it didn't really even roll over the market. I remember I used to be Apple's down, the rest of the world, the market. Apple has a lot of market cap. I get that, you know, but they're like, yeah, Apple is down so big, and I think that's what they're trying to do, the same thing as well, because they noticed that the market just ripping to the back to the upside. Let's drop the Apple because it's the biggest market cap company in the world, and the market really didn't even respond. It did not really respond much at all. If you notice, Thursday, Apple was down big. One market did nothing, closed flat. Because you got other names that make up the difference. Nvidia held, Amazon, Microsoft, and Microsoft didn't even move at all. Yeah, it's a very different market. You gotta pay attention to some of these names. It's not just like, oh yeah, Apple is down, it's gonna take the whole market down. The same thing with Nvidia. Nvidia is down. Oh yeah, it's gonna hurt every semis and this, and it's gonna roll over the entire market. Nvidia was down, Apple started ripping to the upside. You see how everything gets balanced out. It's not just the one way, like, yeah, you're just going to drop two big names from the top. It's going to roll over the entire market. Well, these are trillion-dollar companies as well. Over 2 trillion as well, Amazon and Google. Don't forget that. And then you combine these two, is going to make over 1 trillion as well. So you got other four. So you want to drop Apple and Nvidia at the same time, but the other four are gonna hold some ground. So it's just a this Mag 7 is a very tricky um a bunch of these stocks are the way they works. Yeah, those are not the ones that, sitting and talking about, oh, Apple down, the world is coming down. Nah. Apple will just announce their earnings, start another buyback, and boom, the stock just rip right back up. Apple doesn't really need a stock market. It can just literally be a country with its own GDP right now. That's how much cash they have. It's crazy. Energy is the one is leading really, really strong. Energy was flat last year, remember? Materials are up, was flat last year. Healthcare is just a tough one, tough, tough. I'm trying to see. I mean, I took a shot at Amgen, as you guys all know, but it's a tough one to fight. I mean, hope it gets better. I mean, if we go here, it's just, I mean, I can take you one by one. You can look at their uh, the seasonality will get changed one by one. Just kind of gives you an idea, like how the month goes, and that's what I look for. Okay, this is the actual monthly performance right now of Tesla. This is the average monthly performance of Tesla since 2011 until 2025. So, and this is the monthly performance for for Tesla so far. So Tesla is doing good with seasonality as being 5.61 is where Tesla has this strength right there in the seasonality. Meta is good. Meta is a 4.66%. My Meta's seen a lot of whipsaws right now with this TikTok, as you notice, because of their ad revenues and things like this. Google is good, 3.5% so far. We're 18th, 18, we're right there. So Google is good. Um, Amazon is fine. We took a shot at this one um, yesterday, I believe it calls it. Nvidia is good, just choppy, so damn choppy. Um, S&P is fine after this. Microsoft is good, but I I like Microsoft, but wave count is a mess. Okay, it's very, very hard. I can show you that, but it definitely has a very good looking seasonality and is starting to improve as well on the RRG. We'll go there in a second. Um, but I end up going with I closed Microsoft trade, as you guys know, because we just don't have enough time left. I cut them out flat, and then I went with Amazon, and that's what we covered yesterday, along with Tesla. So I did those two. Um, Netflix, oh, we have earnings coming. So, and this is Apple. Apple has a pretty strong seasonality for the January, but it's not working out for sure. That is definitely going against. So, energy, um, it's the one is leading right now. We have materials, it's half half. Materials are just I mean, the sectors like don't have enough the very low ATR stocks, like 1, 2 points. Yeah, I don't, those are very hard to fight with options. Yeah, like 1, 2 ATRs. You're gonna have to have at least 5 or 6 ATR to consider some option trade. You could buy something near the money or something. At least have like 5 ATRs to at least give you a one standard deviation move. Industrials are, I mean, John Deere definitely took off. Um, that was okay. Utilities, horrible. But you see, some of these months, the the sector itself will overcome the seasonality, right? But technically, if you look at utilities for January, is pretty much the average is down. So does the February. But right now it's at 4.16%. So these four last year was pretty much flat for the year anyways. I think these are the ones that trying to make a move. It's financials, 3.73. See, for strong. Here you have all their earnings, and so the other half for the financials kind of look a little bit rough because earnings are pretty much done from all these top banks here, as you can see. So we just gotta watch the other two. XLY is fine. Got a little choppy here. The next going here, healthcare. You see, it looks good, but it's so damn difficult. Like now we have Eli Lilly. Eli Lilly's taking a dip. I mean, Eli Lilly is down for 5 months now. 5 months. That's the Nvidia of pharma. Eli Lilly has a huge market cap, and that stock is down 5 months in a row. If I can get, I mean, where's that stock right now? If 685.90 area, if I can get like 728 right now, 728. If it can get down to the 685-ish kind of area, I'm ready to buy this stock. You know, just see, I would definitely pick this stock around like that 685-ish area. Buy like a 700 something. You can make a call. It's expensive stock as well, $700 stock. You can make like a spread on this one. I think it's gonna try to hold it on like 700. It's gonna start if it's gonna start cracking below 700. It's gonna start losing some good chunk of market cap. It used to be $937 stock. It's cooling off. That's all it is. Broadcom. Yeah, we can take a look in the Broadcom sector. Real estate. Oh, look at that. Rough. He played AMT thanks to my thanks to the signal. XLK is flat, 0.68. ETF on communication is flat. And then we have consumer staples. That looks rough as well. So, I mean, we're halfway to the month and we're just gonna do the other half. NVIDIA, I mean, I don't know what it is. I mean, just as you, I don't even trade anything last this week on NVIDIA. So damn choppy. It just low ATR. Stock is just in a 5 point range. What I mean by that is like it from one like 125 goes to 130, 130 goes to 135, 135 drops to 130, 135 goes to 135. It's like a 5 point ATR per week. So if I keep this as a contracting triangle in an E wave that can be counted as a triangle, and then we'll look for one here as a leading diagonal down into, we did squeeze a trade from here, as you guys know. I had to add another one here to get out of the one. Um, so we can count this as a leading diagonal in one. If that at this price right there actually did end up making a new high though. The high was 152.89. Look at the new high here, 153.13. This is the double top right now for NVIDIA. Okay. So NVIDIA will break the double top. It's gonna get taken out. It's just a matter of when. So now it took this dip down here. Now we came, I was watching. I was like, okay, if this is a case and we can make here as a 5, now we have a double top. Here comes a retracement. Now this retracement came pretty deep, as we can see. It came all the way down here toward the 78.6, but it held. It kind of poked above it, but it kind of fight its way up. So now at 137. Now, in order for this trend to move from here, okay, you need this move up here in this third wave. As long as this low holds, I'm not betting anything on because this is just a nasty range. Back and forth price action. It's just nothing like more kind of clear move, like something that um, you know, if I like a wave count, I like the wave count. If I don't, I don't. There's just a reason for it. And I'm not gonna force trades on a choppy looking wave count that I'm just kind of like moving labels around. It just doesn't, it's not gonna do good. I don't I don't like to be in a trade where I'm just like changing wave counts every single session. Why are you even in the trade? I don't do that. It just I try to just leave the way it is and just give some time and see if we can make the best possible way to see how we can count this thing right. Not everything has to be labeled every single time. There's gonna be some price action that you're gonna come across in a chart is gonna become so choppy because there's so much overlap. Okay, like here's another way I give you a scenario. We can do this. Okay, there's one possibility right there. If you have a, a complete neckline, here's one shoulder, here's your neck, here's your head, here's your right shoulder. So you can make a case here, okay, of this. And then from here, if see if the NVIDIA has the probability is to make a push higher from here. As long as this holds. That's one. Okay, so that's one pattern that I can show you here. Second is according to a wave count. Now, if you have five waves up, this is count, we can count this thing as a three. Now it has to make a wave something a smaller one, two, and then it goes. It can happen, but it all depends if market takes off. So Nvidia will make his way up as well somehow. So there's nothing negative going on about Nvidia. It's just a matter of like, okay, is Nvidia gonna run this year? Because Nvidia was pretty wild from the last 2 years, especially last year with this AI. So is the Nvidia is willing to take a breather? You know, this stock was up like 178% last year. You have to think that 178% last year. So you expect another 100% upside from here? If we do the math, just pull a ruler, take the current price. If we go, oops, 100% here, put us at right 275. If you expect 100% growth on this stock, the upside from here, because you're from the current price is 275. If you say like, well, I will go at least halfway, 50, okay, that'll put it around like this 206 kind of mark. This 200, 200, 205, 600 level, right? There's a 50%. So from the old price that you're talking about $2,000, because right now it's around like 1,300, 1,370 bucks. So you just have to look at this way. But nobody knows how the stock is gonna perform for the year. But stock is not expensive. It's not expensive. Definitely has a potential growth, but it's a matter of where the heck do you buy this? Um, I don't know what this is. This price action is crazy. Um, Head and shoulder pattern is a one thing. This low holds, market recovers. Then we can look for three versus one back to 155.89. As long as this low holds, if we move from here, we have to take out this double top. So we still got a way to go. And then from there, we can look for this three versus one. Then we need, so basically, then you got diagonal in one, down in two. Now you need to find five smaller waves within this blue three. So this three right there on a higher degree, 161.8. So you take a distance travel from here to this high, projected from this low, that gives you 168. So there's 168 on a higher degree, wave three with three versus one. That will give you your first upside zone to consider or to target. So then from there, then you set back in a fourth wave, and then you go up in five is to complete a five waves within this three. Then you come down in four. That will have a relationship with wave two. Then you make one more pushback in five is to complete five waves of this five of one higher degree of three. They're going way down. So, I mean, it's a great company. So, other thing we can do is the matter, and you gotta pay attention to it. I put a triangle here, okay? Put a wave four here, and then I'm trying to count this thing here. Now what we're gonna do is I'm gonna move this four here. If we do that, that looks like this. Okay. Geez, this dark splits. That's why I hate about this. You see how, because it has that gap. It was not a gap. It's just where the stock splits. But this motive wave is pain in my ass just to keep that screen up. I hate when stock splits. Double the work for me. So instead of keeping it here with the triangle, if I push this fourth here, just make it as a three down, three up, and an extended Y. Now we can count this thing as a diagonal as well. So both ways is gonna work. In this scenario, in keeping instead of, remember, that's wave four here. Now I moved it back here on this one. Now we got this one, down in two, up in three, down in four. That gives us a overlap. This is the confirmation that we need anyways. Diagonals has to overlap. There's your overlap right there. So you have overlap confirmation here. And now from here, what you need is you still need three waves to the upside, A, B, C. So if we make a case here of this third, as long as this thing holds, or if we consider this, both lead us to the upside. Now the tough part is gonna be that if we take out the low here, which is this 129.51, which is right there, 129.51, is gonna stop because we don't need this second wave to retrace below this 127.20. This thing is gonna be invalid. If that happens, okay, this is the plan A. So the plan B is if that happens, then what we need to do is we just gotta have to look for this some sort of a third wave to goes into this zone. NVIDIA works really good with fibs, but it's the same thing with Tesla. There are some stocks that I always talk about and tell you they work really good with fibs. They're just gonna give you that the print on those lows and highs are literally almost to the pennies. As long as you have the right wave count. That's the challenge though. And nothing comes easy. So I'm I'm not doing anything. I'm just only watching. Okay. I'll take a shot at Nvidia. Nvidia's not going anywhere. I was just a little more active on Tesla this week. So I took two trades and then I ended up taking Amazon. I'm watching Nvidia every day as the rest of the Mag 7 as well. Just give a few days. Let me just get a little bit more price clarity from here, then we'll try to take a shot. Because if this fails, okay, I mean, we could make a case of a little bit extended sideways wave two, this one right there, okay? Because right now it held this 61.8, right, to this low. We just had this choppy little move to the upside. Now we're almost back right there. It's just a matter of like coming down to the 78.6. So it can be fine. It's just basically what it is. You're just looking for one push to the downside here. Then you have to make another five up and then three down, and then you go. The point is that you need eight swings. You need eight swings from the low. If that low holds and if you have eight swings, that's when you go. Then there comes your third wave. So it was looking here pretty promising that, well, I had to change this wave count because we had the rejection here at the top. I was like, here's your five, here's your three, we should ready to go. And then the market gets under pressure because of the from the last 6 weeks, and we're starting off a new year. Like I was like, well, I don't know how much Nvidia is gonna run now, when the overall market is under pressure. It's not gonna run its own. So I was like, okay, now this is where we at. It's a little choppy, as you can see the price, the price here, the how the it's not a it's too much. It's like the same thing, but I don't like this. Let's wait a little for few more days. I get a little better read, and I always pretty much try to keep two counts in case one goes against me. I know where what to look for. You don't really have you will know exactly which one is playing out for you. They both cannot be wrong at the same time. It's just impossible. So I mean, but the potential is I I like the odds. The second thing is this, as I mentioned, is about the inverse head and shoulder. If that plays out, I mean, this thing can just take off. But with the neckline and the shoulders and with the head. NVIDIA is a leader for sure. People ask me about Broadcom. Broadcom is had a big run, and then it's just kind of. Yeah, you see these split stocks. Hang on, let me fix this. Big stocks are just kind of. We had a pretty nice trade on earnings. Um, this line here. Broadcom is just a totally different stock. We could make a case here of a fourth wave. It is a little very choppy. um, the high is, hang on, let me just, I didn't really looked at him in a couple days. Make some room here. So what we can do here is that So that was actually the cup and handle pattern that we just play, that played out. Anyway, so what we can do here is you got a one, two, up into. We can make a case here for a fourth wave. It's okay. It's kind of we can kind of see that it kind of starting to go sideways. It if this is if we can just you can do this, okay? You can just make it as a WXY kind of um um uh, complex here, and now you will see if you can make a push to the upside into this fifth wave. That's one. Or you could do this could be a potential for a triangulation as well. We can do that way as well. So you can just go like this. So like this. So that's down in A, up in B, C, D, sort of D like this. Get one more push down in E, E, and then make a move up. So I mean, there's nothing bearish here. It's just, we just, the price just got out of the accumulation phase. That's where you had this massive spike up. And now it's just the price is just sideways. And it's normal, when you have such a monster move to the upside. I mean, you're talking from this is where it gaps up 38.39%, pretty close to 40% gap. I mean, 40% on this, I mean, that's a monster for that kind of company to make that move that quick. So we just, you can do this, put a W here, doesn't matter. But the point is that the high was 251.88. Now you're looking to make price to make a higher high. That's what you need to break. Okay. So how are you going to break this? What you do is just take this high to this low that we just had because you didn't make any other low, right? Because this was the first low at 217.58. You didn't make a new high yet. You didn't make another low yet either. So it definitely looks like a triangle. What you need to do is just draw your fibs from here and just look for this 78.6. Get rid of all this. You don't need this. Those goes way far. Just look for this 78.6, which is at 244. So when you have this high, when the price had this high right there, and then you made this low, you see what the price went all the way back up. Look where it failed. 78.6. See, it backed off. Now it's trying to make another push toward that 244 mark. Remember, I always talk about this. This is your last resort. You're going to break this. You have a very high probability you're going to get to this 251. That's where the sellers are sitting. Always. This is the fib that is just not going to just break through like this. Always is going to fight that area for a couple hours and probably it could go into it depends if you're looking on a bigger time frame. You just gotta have to see what happens here toward the 78.6. A lot of sellers comes into this area, try to sell this thing down. If you just the best way when you approach 78.6, start watching the volume real closely. That's your number one thing I can tell you that. Watch the volume when you starting to get toward this key area, key break. If you see the volume accelerating more than an average, yeah, you have a very good chance the market is going to crack. If you don't have enough volume, you just got to have to watch, wait and see what happens. So that's all I can show you on Broadcom. Yeah, you're trying to make another attempt. You start to break this. When we break 251, then I will adjust because I don't know where this fourth goes. Put it here, whatever the case is. I don't know where it goes. And then I can project the upside for you. If this thing goes into a triangle, because upside will move. So I need those exact high and lows in order to project the upside. Then I'll give you the exact upside what you look for, which I can do it on a Thinkorswim. So I run those swing ones. You guys saw it on the ESs and stuff. They just almost hit them almost to the penny. Some of those highs. We had what was the one yeah, the ES, that was the wedge for Thursday night. I do those options, the ES, and I'm trying to do NQ. There's a new guy. I think he came. He likes to trade. He trades NQ as well. And so like okay, I'll run ES and NQ after the market close every day, and you could have it for all night until tomorrow session. Let's see. Yeah, this these are. I like these Thinkorswim charts are so so. This one. This was Thursday night. You trade futures as well? Okay. Yeah, just watch these. These are the futures that I do on the ES and the NQ. So this is exactly what you're looking for. Okay. So this is I did on what Thursday after close. So I try to do it because there's a hour window of a gap when future market close. I try to do them there, and then if depends what I'm doing, but I try to get them out before I'm going to shut off anyway. So you will have it for the all night. So this when you see this, um, you have to pay attention, okay, to the red line and the green line. Okay, these are your upside and downside trigger levels. Okay, I understand if the price is here and I'm showing you this wedge and you kind of wait for price at the same time. This is what a 30-minute chart. You could see a 9 and 20 EMA you can keep. Okay. Um, and then if you are bullish and willing to take a shot, your first upside target should have been 6,017. Okay, because you need to break this swing high in order to move up. If you break below this one, okay, your eye should be looking at this 59.47. That is going to be your next downside retracement. Okay. Future market works really good with fibs, just to let you know. Works really good with fibs. You're talking prints to the penny that where you could set your targets. Okay, you just have to let the position work. So we're at 59.71, and then up to so this is the level needed to break 6,017. Then they have a six because I do different time frames, so you will see few of those prints, and but just pay attention to those prints. That's all it is. But it will come into a play, but if you're gonna break either side. So then this one is where we just went up 617, 620. That's the 630, 32, which is right there, 632. And then went up to, I didn't open that much far. I didn't know the market ripped that high, but then went up to 651. Look at the high right there, 651.75. Look at this one, 6, 51, 80. The high was 60.51.75. That's what I say. You don't mess with my fibs. Just don't. Nobody mess with my fibs. So they're just a different swings that I run. Um, so just pay attention to this one, and I haven't done it for the Monday market is gonna be closed Tuesday, but I'll run it for you, and then I'll do the ES and NQ because that guy, the new guy, he does NQ, so it's like okay, you can play it. I was doing gold as well, but I didn't see any. Oh, you're bullish on Broadcom. Broadcom's a great company. I love that stock. You guys probably noticed so much talking about Broadcom all the time. Broadcom and Nvidia are my two top favorite companies on out of all the semis. Really good, great stock, excellent balance sheet, uh, business is good, earnings are solid. This is a stock that has a great fundamental story along with technicals you know a very very good stock. um I'm AMD, it's garbage. So last or least, I believe I already looked at all the swings and stuff. Tesla. Well, I laid this one out yesterday. Okay, I know some people probably scratching their heads, and we did good on Tesla this week. We squeezed two trades out of it. um I've had this thing up for some time, as if this was a completed five-way move, and I was at 488 that fib, and it actually 490, sorry, right there, that 100%. It failed at 488.54. It was 3 points shy from there, from this. And then were expecting a three-way move to the downside. So we have that. Now we can see, okay, I can count this thing as a diagonal in A, three up, three in B, down in C, and I'm sorry, five down in C. So this is called zigzags. You got five down, three up, five down. That's a simple zigzag ABC pattern. Okay. I wish every correction is like this. So you can just make a five-way move up, make a counter trend down, three-way, done with it, and boom, there we go. Okay. The question now is like, if this is all of C, I'm sorry, if this is all of a zigzag in two, okay. Now what we need is we need five and three. So we can count this now because correction, right? When we have a correction, what happens? We need five waves to the back to the upside. Five up, three down, five up, three down, five up. You remember, it's just a sequence. Elliott is very fractal, very fractal. It's just all it is. You're just looking for repeating patterns, okay, over and over again. That's why five waves up, three down, five waves up, three down. It's just a sequence. Then becomes one higher degree, three down, becomes two, another five up, becomes three, another three. You see, it's just a sequence. That's what it is. That's why these Elliott has a very good probability of winning trades because it's a repeating pattern. So does the market. Market is fractal. Market is repeating. Anything that is happening right now in the market has happened before, years ago, months ago, or whatever. And market is doing exactly the same thing what it did last time, and it just corrects higher, right? So the same 5% dip that you had, market would have had the same dip back a couple months ago, the same 5%. What happens after that? Market end up making a new high. So same concept here. You making a five-way move, you have a three correction down. What you're looking for? This is your highest swing, higher low. What you're looking for now? You're looking for this move, right? You need to take out this high just to make a higher high. A swing trading is different. Swing trading is just three-bar swing, right? So this is a low, lower high, and lower low. The same thing here with the bullish trend. This is your high, this is your low, this is your higher low, and this is your higher high. That's it. There's no rocket science to it. It's really simple. But then swings has different counts and things like that. That's different part. But the basic one-on-one, okay, concept of a trading is what? Here's your one, here's your two. What are you trying to do now? You're trying to break this high. This is your low. This is your high. Higher low. What are you looking for now? Higher high. This. Now you do it on a swing, you do it on an Elliott wave, whatever you want to do, whatever you want to draw your cartoons, that's fine. It really doesn't make any difference. You just need to focus on your high and lows. From there, you can try to see how you can then you can put what you do is then you're trying to project the upside. Most of the time is going to be equal measured moves. Distance travel here in one projected from here, equal distance travel here is a 100%. They call three versus one. That's your minimum upside. You cannot even put a three wave, a third wave, anywhere on a wave count if it retraces less than 100%. That does not even consider a third wave. If it's a shy of 1 or 2 points, yeah, you can live with that. You don't want to have wave one, two, and three just ends like this. It didn't even reach 100% and it stopped right there. That's your wave one high. Are you really gonna fight your fourth wave here? And then you're expecting another pushback to the upside in a fifth wave, and you think this thing is gonna look normal to you? You have a huge one, down in two, shorter three, and you barely had any move for four to breathe, because here you got your invalidation point sitting right there, and now you're expecting a push to the upside. How the thing overall looks like to you, first of all? Goofy looking waves, extended one, down in two, shorter three, teeny tiny fourth, and then you're expecting a five. It just doesn't have a right look, right? Yeah, so Elliott will stop you right there. So on this count, if this is all of two, like we can take as a case as a one, same concept here, that was a bunch of zigzag down in two. And then from here, we can take a diagonal here, a little bit expanding what I do diagonal, but it works. You got a one, two, three, four. You got an overlap here, right? And then you got this fifth push here, and there you got your retracement. This is what I bought him yesterday. I remember that 410, I believe. I took that one because of that Kagi chart I follow. So that was a pretty because when this stock was selling off and it was sitting around here around this 415 range and stuff, and I was sitting and watching that Kagi chart, and the Kagi chart I was like, okay, well, it's a 410 mark, so let's wait another 4 or 5 points and then I'll put a trade on. That's the entry point on that one that I was watching, and then just retraced it here down to this 410 area. It dipped to 408. Actually, the low was 409.13. So that's what I put a spread on at 410. I was like, okay, now let's wait. Let's see how it plays out. I was like, I got a Kagi going. And then I'm like looking, and the same time, I was like on a 1 hour chart, and the go signal triggered on that 1 hour. I was like, okay, we're good. I was like, we should be okay now. And then market closed because of a late trade. And then yesterday it got that push to the upside. So I just just had those two things. I was like, I gotta go in here, time to go. Then I got that Kagi right there, so that is showing me an entry. So it's like we should be okay. So let's stay in a trade. So then I cashed it out yesterday. Um, that was, I don't know what the print was. Showed you that. So, anyways, from here, you can make a case. of a one, we can do a one, two, and now we can see if we can make this room to the upside. Okay. Remember, the key breakout for this is what? 455. What is 455? 78.6. Okay. This will trigger this. So we're not there yet. We're kind of 15 points shy of that print, but we didn't really even come close to it yet. So you're gonna watch 455, and that's what I will be watching as well. It's 455. This is a 78.6. This 78.6 breaks. This three-wave decline here will confirm, and then the price can make a push, may make a move higher toward this, toward the 488, which is the all-time high, and then we can look for this 500 print. That will be a three versus one. Okay, if this holds, and now if the price fails here, okay, and if this is still a questionable, like, okay, well, if this is not the end of the wave two, so how do you know the, how does one wave count confirms the other wave count? I'll tell you that, how it does that. If you have a 1 2 here and you have 1 2 here, where's the invalidation here? Is 380, right? Because we know if this wave 2 right there should not retrace below the origin of wave 2, right? Of the one higher degree, because you're trying to go into a smaller degree. This 380 mark right there will confirm this one. Okay. That will confirm this one. This is why I labeled this one a little bit differently. But these damn corrections are very subjective. Now, the 2 versus 1, which is 23 points, is a 400. The 38.2 retracement on a higher degree is 355. Where this 355 is coming from is from here, right there. So these are your external retracements. This is your retracement starting where the original the count was started. And where does it started is right from here, from 212. Why is it 212? Is because of this count on a daily time frame. Remember I laid this thing down? You have a flat here in W. Here's your X. Here's your triangulation in Y. And from here, we took off. There's no other way that you can count 5 to 1 to 1 to make a count. It's not going to work. The low here, 138, or, the low is here at 212. I laid this thing down a couple months ago as well, which is how the this thing ripped to the upside. There's no other way you're gonna, if you think like there are, I can, some people are making this whole thing as a in a triangle, like they're going like this. If you do that, okay, meaning like they put a triangle here, okay, making this and this, the whole triangle, and then put an E wave here. If you put an E wave here and start your wave count from here at 182, this is a three-way move. It's not a five-way move in order to make a case for this wave 2 as a 1 2. How are you gonna, this is not, I already looked at it. It's not, you, there is no chance in hell that you can count this as a five-way move. This is a three-way move. So it just doesn't work. If your wave 1 is wrong, you're not gonna work, your fifth is not gonna work for you. I can guarantee you this thing. You need to have at least 5. You need people, your wave 1 must have to have 5 waves in it, because the motive wave cannot be a three-way move. So that's all done. All done. So then the wave count starts from here. This is the triangle. 1, A, B, C, D, and E. That's when you have a post triangle thrust to the upside. That went above, the end up making a higher, making a high. Now the question is, if it starts from here, it's the same fibs right there that you can see, 401, 355. Now what we're fighting right now is this wave 2 to see if it ends here or not. If it ended there, I have this. Remember, same thing, 212. 5 waves up, 3 down. Now if this is all of 2 of a zigzag, then Tesla should ready to go from here. If it is not a wave 2 completed yet, and if it fails, okay, because remember, we need 8 swings. If it fails here, then we're going to entertain this thing. So we're just going to go with A, B, 5 down in C. So we have 488 down to 373. So instead of counting this thing as a zigzag, we're going to count this thing as a complex. So we have 3 down in W, 3 up in W here, 3 down here, and then you have 3 up here. So you have A, B, and this is your diagonal here. This is a perfect looking diagonal because you have a bunch of overlap with the converging lines. Now the question is, the risk is on this trade is what? Now we need another 3 down to complete the Y of this wave 2. The wave 2 external retracement from that 212, we looked at them before, is a 355. A 355 because some of these C wave, because I don't know how this thing is going to come down, because some of this C can accelerate more. You see what happens here? Look at the size of this one compared to this one, because this C is an actionary wave because it subdivides into a 5 smaller waves. So sometime it can come down hard, you know. But the overall relationship, okay, of a Y, if you have an extended W, you're gonna have a shorter Y. When you have a smaller W, you're gonna have an extended Y. Just remember those two things. Or you should write it down as well. Okay? What I mean by that is this. When you have a smaller W wave here and you have a connector X, you have a very good chance that you're going to have an extended Y. When you have an extended W here, you have a connector X, you're going to have you're going to have a Y wave is going to be shorter than W in length. So what are the retracement levels for this one? Well, if you have an extended Y, that will definitely going to exceed 100% relationship of W first of all anyways, because you already have a shorter W, right? And then you have a connector X. Then you took out this low. So you're definitely you're most likely going to exceed more than a 100% measured move of W, right? So this one extends. This one right there, when you have an extended W right there, your Y wave right there, most of the time stops right here at 61.8. Like this case. If this is a shorter one, we don't know yet, but we're going to find out. If it looks pretty big, and then if this is the X, we should have something close to this zone right. This is your zone. Is for the price to turn around. That's it. So there's risk. Okay, so this is, remember, I tell everyone, trading is not a one-way street. You can't just ride on one train and like, yeah, this is it. We gotta know our downside risk. I mean, I don't need to sit and change wave counts left and right. I'll know we're gonna find out exactly which one is playing out. You have them two different wave counts, right? How both can be wrong. It's impossible. Both can be wrong. One is right. I know this thing for a fact. So the upside, what you will be watching, and I will be watching, 455 upside confirmation trigger, right? That's the upside trigger level. And the downside 380 because we don't want to lose this smaller wave too. I don't know if I don't know how stock opens on. I don't want to change anything yet because this low is still in. I want to leave the way it is. You see how Tesla works with fibs? Look at the low of this to this fib, almost to the penny, and then boom. I'm telling you, Tesla works really good. But you just, and it works really good with time as well. I didn't do anything yet, like running some time, which I will, but we're not there yet. I'm not gonna, I have a backup plan in case if this thing plays out. That doesn't mean that the overall wave count or the stock is the price is going to be bearish. The this is it's just a matter of how we're going to how is this second wave is going to end. It's a counter trend move. We already tested 4 to 1. Tesla is keep coming back toward this 414 mark. That was a 3-year high. As you can see, how many times it's coming back toward this 415. And now the question is, does this 3 gives you another 3 to the downside toward the 355 mark? Or if the selling pressure really exceeds, or does we go to 50 mark, which is 321? 321, that's all going to be measured by this 212. This is the high and low that you're going to have to watch every day. 212 low, 488 high, and just look for these external retracements. 23.6, we already tested that. Getting a bounce. It's just a matter of like, are we going to clear this from here? Or do we make a one more push down here toward this 38.2? That's where we find support and then we make a move higher. Regardless what the outcome is, the path is to the upside. What time that will take? Well, I don't know that. I cannot give you that. But then when we break this 488, and then on a smaller time frame, I have some of these projections here, and then if I need to go back and run larger, it's gonna pretty much that's gonna be the same because there's not that much room Tesla has made back to the upside. Now the point is this: you have a stock here that is broke above November 4th of 2021. So came down like this. Just Tesla didn't really do anything for like 3 years, right? Just whipsaws back and forth, stayed range bound, this and that, right? It's a long time, 3 years. So here, after 3 years, you think Tesla just make almost this much move after coming back after 3 years? Think about it for a second. I don't think so. You don't come back to the highs after 3 years just to make this much room. And you think like this is coming. Well, it went through the whole phase. The price were there for a very, very long time. So if the price now is trying to break the 3-year high, is this where the consolidation most of the time comes into a play? It's just trying to defend this high right there is just where you have the largest percentage decline. That's when the stock went from 414 down to 101. For some people, that was still not cheap enough. They were thinking it was going to be 50. So I bought them here. Still I have it, but I'm buying more. I bought 10 here. I have 175 shares here at 150. I bought them 3 years ago. Then I bought recently about 10 more at this. And I'm the same time I'm taking option trades, as you know. And then if the price will come down at 355, I'll buy 10 more. I'm not adding anything here in between because I know how Tesla works with fibs. Wait for the print to come and hit, just buy it and just wait for it. You can build a long-term position this way, okay? And at the same time, you just keep taking counter trend trades on the option side. That's the only way you're gonna trade Tesla. You cannot trade this stock just on based on one side. Just like, well, I just want to take option trades. Buy the stock, hedge with option trades. It's gonna balance. It's gonna average you out throughout the whole year. Last year I made over $70,000 in Tesla alone. 70 grand by doing this. I sold 175 shares that I have. What the hell is that? I sold 175 shares out of 150. At 300, I sold right there to this mark. I was up 50 grand. Then went almost negative. Then finally, I went right there. This is what I sold 175. Should have sold it, to be honest, but I did. I got rid of 175, free up some of the cash. I left the 175 or 150. I don't want to give up this entry at all. Then we just rallied back up. So like, okay, that's fine. Stay. Then we just whipsaw back and forth, back and forth. I was like, okay, that's fine. That was this. And now I'm gonna build a new position for this year. Okay. I said like, okay, let's add to it. So now about 10 more here. That's what my plan is. By 10 here, 10 here, 10 here. That's the zone that I want to buy for sure this year. Against this, I mean, if you don't have any shares, then try to at least get like 10, 15, 20 shares. But it's just, I'm just gonna buy them on each fib. Is that print comes after hours? Because I bought these ones after hours because the session closed and we didn't even tested that. Like, wait a second. Then I went after hours. I looked at the price at 401.23. Boom! I just bought them right there. So like, okay, that's fine. It come down 3, 4, 5, 6 points. I'm fine with it. And now from here, this is gonna be my second zone. That will be my third if that comes into a place. Or I don't even know if the second is gonna come into a play or not. But but we're gonna track on the wave count to see how it plays out. But the point is that you stay long the shares and you just keep playing those spreads with me all year. I can pick some leaps as well, but I don't want to add any leap yet because we didn't really had much any kind of a big retracement. It's a very shallow retracement toward this 23.6 after that kind of move. This is the most shallow retracement that you can get. 23.6. It's just a question now, are we gonna come and test this 38.2? Well, the only risk that I see on this stock right now is the TikTok sale. If Elon is gonna buy it, I don't know how he's gonna pay for it. Okay, is he gonna dump shares to pay for those TikTok? That's one thing. And the second thing is this: on the 29th, they have earnings. Tesla is not a big mover on earnings at the time when they report numbers. Tesla moves after hours as soon as Elon is going to open his mouth on a conference call. That's when the stock is going to move. Stock, the first initial response of a Tesla, it never happens as soon as they're going to announce their results, or whatever it's going to be. Then Tesla is just going to whipsaws back and forth as always, and it's going to wait for another hour, hour and a half. Then Elon Musk is going to come, is going to on the conference call. That's when the stock is going to move. So is it the earnings going to take us down or earnings going to clear the upside? Well, that we're going to find out in the next either a TikTok news or in the next 1, 21, 2, 3, 4, 5, 6 days, 6 trading days. So I have 6 trading days for company to report earnings. And then at the same time, I don't have any option to, I'm long shares, whatever. If it happened, what I got out both. So I just cash the money, run. So this is basically what it is like if you have shares, you exit the option position because sometimes you kind of think like, well, I really didn't got enough upside, but I closed the trade a little bit early. But you have shares working for you that's paying you the difference. So you always have to look at that way. It's if now the stock sells off, of course now your shares are getting hurt. So what do? We look for a potential support and we buy another spread. You know, whatever the bounce that we can able to play, well, shares gonna go up a little bit when the price is gonna increase. So does the option side is gonna pay you. So that way you're gonna have to balance those options and the shares at the same time only on this stock. It's the only way you're gonna play this stock. There is no chance in hell that you're just gonna buy a couple leaps and like, oh yeah, I'm just gonna cash out big. Yeah, good luck. Yeah, good luck with that. Oh, the red note on actual Chinese. Yeah, well, I mean, technically, like, if you look at Trump is in a good term with you know, she, always gonna stand up for China, and Trump is always gonna put America first as well. So we'll see. They wanted to strengthen their, a lot of them are scared of him because he's the little kind of ruthless guy. But he just wants the power. He just wants the desk. Once he's gonna get him in a 2 days, yeah, he can turn things around. He's one of those guys that that who watches the market, and this is the guy who will just literally send one tweet and the whole futures can just turn around. It's just there's no president in the other world. There's no president in the world comments on the stock market except for him. Just nobody does that because everybody knows there's consequences for it. You can you can hurt somebody really bad based on their direction of the trade. Have you ever seen Biden has ever made a comment on the stock market? They don't. Obama didn't. No, never. But he's just a little different, you know. But he's crazy about the stock market as well. Yeah, well, we'll see what happens. It's too early to make a call. I mean, plus we just start off the new year anyway, so it's too early to say things. Um, the rotation on a Mag 7, see, rotation looks good. I would stay long. I might take another shot at Tesla. Looking at this PSA yesterday. Look at this. See NVIDIA right there? NVIDIA has to wait. Microsoft is the only one that I could see. Amazon only played this one. I'll consider it again. Meta moving down. Netflix is going into earnings. Look where it is. I think Netflix gonna get it's gonna take a hit on earnings. There's no momentum. They have earnings in 3 days. Yeah, it's a pure gambling. Yeah, Tesla is some of these. Where do we start this? The date changes here. Gotta pay attention to this date. We started the year here, here. So we started off the year here like this. Look at this. The video is the only one that was going up to start the year. Look, everything was This correction or choppiness or this whatever the fake sell-off that we just had was a little kind of expected based on these stocks. You can kind of see that all starting off with the loss of momentum, except for Nvidia. And we were long Nvidia at that time. I know that we had that trade, and looked like Meta just didn't want to really doesn't want to push here. But after a couple days, the first one started to form the hook back up. So look, all the other ones are. Look how Tesla is going. See how Tesla is so far away from the benchmark? Tesla just keep coming down, down. How Meta just went up. Now Meta is just kind of goofing around here because of all those TikTok news. It was really gonna play this one to be honest. I was like, let's take a shot at a spread on Meta. But this TikTok news is kind of putting me off. It's like, nah, I don't wanna trade the news. So now this is where we at. Well, this was the day before. This is where we closed the session yesterday. So Microsoft, watch the Microsoft, watch my Microsoft has this, but you see, like it's just too close. I want to have something a little far, you know. That's what you want to trade. You want alpha on a trade. You want some lame 2 3 point trade. You want something that moves 10 15 points in a couple of weeks. So yeah, this Apple is, see, it's kind of away from, yeah, it's three decile. It's not that bad. It's three. So I don't have any Tesla. I would definitely, but see that the thing is that you see that was really hoping that Tesla kind of go this way, but it's actually coming close to this. So Tesla might chop for a couple days. We'll see. From here, it can make a move back up. Yeah, this updates on a real time, so I can. But again, it's one day, so this is daily. It doesn't. But if something is down here, it doesn't mean you're just gonna jump on a stock. It's not how it works. I mean, you need you need a good wave count. You need to know where your support is. If there is a weakness here, where you can buy. There's some lot of stuff goes here. It's not just couple swimmers that you can just watch and just start throwing money on the board. Yeah, just I wish I wish that's the case. I was looking at this yesterday. Public storage. Nice setup here. Looks really nice. Plus, I got this one of those blue ones, the mean version. I try to draw. I mean, look, Mesa looks pretty good. It's a 1-2 swing. You have your low here. That's your high. That because it went above this previous high right there. So this is a 1-2 swing. Nice shoulder on both sides. This one. That's your head right there. That's your neckline up here on the top. I was trying to build that zone yesterday to see where we could find entry to see if we can take a shot at it. And I noticed that because I run scans, and mid and during around like most of them I do around like 12 o'clock, around like lunchtime when kind of thing cools off. Yeah, that's when I run scans. Um, Nothing in the morning, as the volume is too crazy. And then I kind of like this one to see if we could swing this one. This is a very highly correlated stock with 10 years. Keep that thing in mind. Very, very rate sensitive stock. There are three names that you just have to remember. And these are the ones that I like to trade if I'm willing to bet against the 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 rates. One is AMT, one is CCI, yeah, well, I forgot. Crown Castle, real estate, and then public storage. These three stocks. These are the three stocks that I trade often. If I want to go long real estate, these are the ones that I these are the stocks that I hunt for. Because most of these other real estates are not a very that doesn't give you too big of an alpha. These stocks moves. So I'm gonna show you a different way. Let's see if I can do a relative comparison. Let's do AMT, Crown Castle, CCI, and PSA. So if you do this, here's your three stocks. So we can do a last year performance. Now you see, if you compare these three stocks, you have do this a little bit wider. Okay, so when you have, these are the three stocks since last year. As you notice, the Crown Castle is the one that got hit the most, right? And then you have AMT now is kind of a bit of a bounce that we just played, the 663. So since the last year and now this one is, so when you look at and compare three stocks, now this one right there, as you can see, it has a much better relative strength compared to these two, right? So when you look into buy a stock, you look into buy a stock which has a much better relative strength, right? A strength has a different momentum compared to something you just want to buy something dirt cheap. If you want to buy something cheap, you can always pick the lowest guy, right? Because you already know, like, yeah, it's the most cheapest price out there, right? You can buy a lot more shares because of the price, right? But the one which is the laggard is the one who's gonna suffer the most, who's been suffering the most, and is gonna take a much longer time, okay, for the stock to recover. So when you have a stock that has declined to the downside, but it didn't really took that bad of a hit compared to this one, meaning it has a much better relative strength. So you have so would you rather buy something that has a much better relative strength, which has a potential to improve much faster because it didn't decline that much? Or would you buy something that is already beaten down so bad and now you're hoping for that stock to overcome and reverse? You see the point? So you always have to look, either you go with the middle one, either you go with the top one. This is why I'm not touching this one. I'm I was I looked at him a couple of days ago. I was like, I'll take a shot at this one is in the middle. Okay. It's a 50-50 shot, right? It will improve. Worst case, it can decrease a little bit more. Then we'll manage and see how it goes. This one right there I came across yesterday was this one. I was like, it has a much better relative strength. And I put my little fancy little clouds here. Look at the resistance is the support is right there that at the tip of this cloud as well, right there as you can see. This is something kind of new for me. I never, I kind of like the look of these little clouds. I don't even know what they mean, to be honest. I gotta spend some time reading about some of these lines and stuff. But I have them as a default. I don't know what settings and stuff you gotta change, but that's just, I'm not worried about that. But it has a pretty, I think it's this support right there. And plus it closed this week. That was a lower bar. Um, See if we can take out this high right there. I think the stock is gonna pop. Uh, this she got this week, a week before, a week before. So you got one, two, three, four. That's 4 weeks. That's 1 month. So looks like that this selling pressure that the stock had from those 10 years It's taking a bit of a pause. It doesn't mean that it cannot. I mean, I don't know if it's going to accelerate that fast even more. But I think this stock is gonna, if it can pop a little bit, this can make a move up. So for risk point of view, pattern looks good. It's a matter of like if rates cools off, 1-2 swing is valid. Blue signal trigger, second one. There's one here, the second one. Last time it triggered back here, 2022. You see how many years and months it took for this thing to triggers? Yeah, it doesn't come that often because I have certain conditions in there. Take a long time. So I might buy this one on Monday. Take a shot at this one. Do like a, what is that stock? It's at 296. I make like a 310 call spread. Can do that. It's an expensive stock. I don't know how much the premiums looks like, but I'd rather just do 300, 310, like 10, 15 points spread to the upside. Let the thing work for some time and see. If it didn't really, what's the low here? 286. It's damn close to this 285. That was close because it's just sitting right there at that tip of that cloud now. You see right there? So I'm gonna watch this one down. I will can get this move up like this from here. That'd be nice. But that's several weeks. That's 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 9 weeks of price action. Because you're looking at weekly bars. They're not daily, Joe. You gotta buy some time. But this is if freight backs off. If not, I mean they're gonna. I think that's it. I'm gonna stop the recording.